Don't do that to me, bro. Again, is it for everybody? Why is my screen frozen? If I make it,
Because it's Apple?
Yeah, it could be. I'll make it 1080p, or just the source. Alright. And if I change Windows, looks like I want to do the phone's close. Alright, tell me if you can see my screen now. Can you see my screen now? Did anybody confirm if you can see my screen?
Yeah, it's working now.
Alright, cool. So what I'm trying to explain is, I was trying to say that we on a daily, we're in a really bad place. One, because the market is subjective. Two, it's because we have this bearish FEG, which we might use now as an inverse to support price. We want to see signs of support to bring us back up. Also, we have this area here, which is a bullish FEG, and it's also used as an inverse. But more importantly, that we should discuss around here is the fact that we have a bearish FEG and a bullish FEG. This area here is layman's term, it's a balanced price range. Okay, so it's a really strong area to hold price. It's one of the PD areas that can support price or reject price. So depending where we are in price right now. So right now we are up here. Okay, if this is true, then we should see signs of respect of the midpoint of it. Right, that was one of the points I wanted to go over with. And the second is relative to objectives. All right, so we had the beautiful shorts. I was in those shorts, but I got out around here. I don't want to hold 3 news because this could have easily been a way upwards, right? You can never know. It's never consistent, never. Okay. If I was in here and news was somewhere around here, maybe. But you saw last time in CPI, we still got wrecked. So, but that was CPI. Anyway, what I was gonna try and say. So this here you can see the reflection of what we had on the daily on the 5 minute. All right. And do we see any signs of support at the midpoint? This is just take a midpoint from here to here. No. All right. We're probably even below it. So if this was a balanced price range, price should not even close below the midpoint. Right now it's still close. It's still around the midpoint. But you can see from the momentum is already like that. And I want it to go down actually, because if you start to find support from here, then I wouldn't even be looking for a trade. I want these lows to be taken out. All right. I want these lows to be taken out. Here we have also an FPG, really discounted FPG. And we have several order blocks in here. But other than that, the important part is this low. Why am I choosing this low? Is because what do you think this is? Original consolidation of a market maker model. Original consolidation, price goes up, price goes back to retest original consolidation, it goes back up, make another consolidation, not consolidation, accumulation phase. So that was step 1, second step, and then and after the second step, we will have the movement up, where we will not probably find any entries, all right, until we hit this. Now, this to me, this is an original consolidation as well, right? But here, it's not a market making model. We still have to form these swing highs that we maybe in the PM session we can target. Right now, we only got this one. And maybe this one. But for some, this might be the original consolidation. For some, this might be the original consolidation. For some, this whole thing might be the original consolidation, right? So I want to see more engineering of liquidity, okay? So more swings up, down, down, just like how we had yesterday, right? So we had original consolidation. We had 1 swing, 2, 3, 4, 5. Okay, so now once we have this moment reversal, all these highs will become no resistance and targetable. So while you're here, let's say you took a short long here, you'll be probably looking to take some profits at the nearest swing high, right? In a market maker model, these are TPs, yes, but that But keep in mind that price will eventually come back to original consolidation. So you can leave a run up, okay? And it's not greed. Oh, just let me get, maybe if I get a few more ticks, it's not greed. So you saw me do it yesterday twice. There is no single reason to hold. You can take partials, and the beauty about it is that if you, let's say you price you around here, right? You just missed all this move. You can't even, you won't be able to catch a trade here consistently, okay? It's unnecessary. You would be looking for an entry. So let's say we went above this high, right? Okay, no problem. Price went back there, you can get an entry at FPG, maybe at this FPG. Price went above this high. Well, that's the wide explain now. Same thing with this high, you can still be finding entries. We have small money reversal, first step, second step. Here is the best place to enter. Now, when you're around here, you'll be like, oh, I missed the whole move. No, and we took many highs out, so maybe we should see some rejection backwards. No, you can find yourself an entry here. Maybe if not the 5 minute, you can go in the 1 minute, all right? Or in the 30 seconds, or the 15 seconds. There's a small little feature here, or there's this order block here, all right? This is an order block. You can go short, you can go long on it there, or you go low, low, high and high. So the high screen candle from this low to this low, in between them is this candle, right? So this is what? This is your breaker block. Back here, you can be entering a beautiful trade here. And you saw yesterday how we entered this exact same trade and the next minute market pump, right? Of course, it was more apparent on the 1 minute, but price is fractal. So we see it first on the high time frame, lower time frame, lower time frame, micro time frame, and etc. etc. It's fractal. You can see the same model on everything. The most important thing is having model inside a model. So right now, here we had a bullish market maker. On the 5 and the 1 minute, we did have the same. On the 15 second, on the 30 second, on the 1 hour, all these models, high time frame, lower time frame, were in conjunction with one another, right? So that means you can trust this trade very well. What do we have here? Like I said, we have original consolidation, market pump, first step, second step, and then finally we hit a level, a key level. Probably there was a fair value gap around here. See, that fair value gap, for instance, is our high time frame. Yes, I'm on the 5 minute, but it's still high time frame. Small money reverse right here, all right? And then you can start now. The whole point of this whole move was to generate these swing lows. Well, I didn't go over much the way you target the low ones, the short ones, only the long ones. But anyway, we have these exactly the opposite. So we have swing low, many lows, many lows, many lows. All these lows will become targetable. Boom, 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 boom. All right, what's left? We have this one's also taken out. We only have the original consolidation low taken out. All right. Now, if you go on the 1 hour, this may look to you like a more chemical model. Sorry, the original consolidation, not this one, right? But to me, I don't want to hold. The bigger the time frame, the longer it's going to take to come back here. So I'm waiting for this low right there to be taken out. And you saw, while we put the market open, somewhere around here, I said, please dump on market open. And then it did thank you. It said thank you, went all the way down, coming back here. This move here is not because of this dump right here. This dump could, many times the market dumps and then on big news like PPI and then starts pumping again. This is just enhancement to hasten the process to go to the swing low over there. Okay. And we are very close to it. Also, we have this fair value gap, so maybe we can purple super. It's kind of a patience game. Wobei von der Zahl und so weiter eigentlich gerade. Okay, well, back to you, brother. All right, I think we took it. No, we didn't take it yet. So our eyes is on this low. Did we take it? Told you guys you can take a scalp short if you can find it, maybe in the 1 minute or something. But I won't. And there we. What bitch? Hit me, baby. Hit me. What a bitch. All right, so yeah, that is not cool. That is not cool. But it's expected. Why? Because the market went all the way down. People know they're gonna take out this near swing low. They don't think of this as a market maker model. They see this is a swing low. Oh, let's target that. So the market comes all the way very close to it, very, very, very close to it, and then pumps to take them out. Because there's some people FOMOing in somewhere around here. Yo, you crypto boy. You crypto bro. Yeah. Okay. So where's my level? But eventually this low has to be taken out. We can go on the 15-second and watch it get hit. So you could have entered at this FVG or this at FVG. Hey, bro, what am I doing? Yeah, this FVG, or you could have used this as an inverse to enter right there. Okay, and we hit it. Congratulations, boys and girls. We hit our target. Now that's something I like, right? Good, we did it. Now we want to see if we can get support at this FVG. If we can, maybe we'll also have an order block here so we can note the opening price of this. Let's see if we can get it here. Let's say target hit. That is ugly. All right, so here we are at the key level, the opening price of this order block. We would want to see some displacement, maybe to take a long. Otherwise, we disrespect the midpoint of this order block, we go straight to this low. And since there's this low here, we have no FPGA. What's this? No FPGA or something. Then we can come back to this FPGA. So I have this in mind. Should our plan not work out, that is our lifeline. So right now we're expecting the 5-minute order block opening price, which is really important key area. Up to the 1 minute, do we see anything there? No, we can remove this. I don't like the stuff on the screen. What's this? Oh, it's our FPG. All right, so we are not respecting the miss, and in fact, we use that as discount. So I told you, if we close below the midpoint, we're going to go straight to that low, and that low is getting here, or go here. So now, this here, our eyes move to this low, all right? You're waiting for your edge. And we predicted the market where it's going to go, but are we taking a trade? No. Is it because we're not sure? No. Because we want to take longs only when set of criteria is met. Okay? So we let the market do its opposite thing to get us to our things. Right now, we are in where we want the price. The price is already where we want it to be. That's the correct way of saying it. And other than this area, this area is very balanced except this portion right there. So if the market drops one more time, it has this level here to take out. Now there's a possibility to take out this lows, this original consolidation, because if we go, we might see this as a bigger time frame. Market maker model, right? Consolidation, first step, second step, and then boom, smart money reversal. Now we start targeting these lows, right? It's a potential, but this is for if you want to like hold for like hours, days, which is something we don't use. Since we all of us use funded accounts. There we go. We are right now entering the inverse, right? So we want that price to come back here. We could have took a long. Nope. Come back here. We could have took a long. Nope. Come back here. We could have took a long. Why not? Because we're not getting the displacement. We're just saying a single candle taking all the target in a single manner. Okay. Okay. Let's look at the feature before it burns. Welcome, Xavier. Welcome, Crypto Boy. Already welcome there. Not finding the market. We want displacement up, disrespecting bearish PD arrays, and starting forming some bullish PD arrays. But before either of these happen, we should see displacement. No displacement, no trade. I don't care if it's dropped all the way down here. We are not 50-50% trading, even though it looks like very nice to short. I want to be long. You might have a different conviction if you want to be shorting, right? You stick to your conviction. If we just entered here, we could have just ended the day here and been done for it. All right, let's go back on the 5 minute because it's very far away. Levels are either. All right, so now we came back to the inverse. Now, would we close below it and use it as reverse, as an actual bearish one, and then come back, take out these lows? Or do we not? I highly doubt it. In the chat today, I said, I don't like single drops. It offers us no data. But does it make sense? It makes absolute sense because this is a market maker one. This one here is what we're going to be trading. If once we form these swing highs, maybe by the time PM session, we can be looking for longs, targeting all these swing highs we formed. Right now, we only formed one, and the market is trying to complete its original thing. All right, so a close, that was a weird close. A close below this one, come back, retest it, and then come back and take out these lows. But before we come back to these lows, we have to keep in mind the midpoint of this order block. The midpoint of this order block should be disrespected, not supported. All right, I see why. Like that means if we get close, we have 37 seconds left. If we close below this line, we'll come back and take out this low, 100%. It's not 100%, 94.75%. And yep, the market maker model is going to be complete in a sec. Now let's come back into our strategy. Our strategy is basic. We get a sweep. We get a sweep. Chosh. FVG. This is the chosh. This is the FVG we entered at. Right there. Zero drawdown. You could have had yourself a beautiful, and you target previous session low, which is Asian low, and you could have made a beautiful 400 points or 400 ticks, which is equivalent to $500, $2,000 in roughly 5 minutes, 10 minutes. But that's not where it ends. Of course, it went all the way down to 1,000 ticks. Holy crap. But would you expect such moves? Should you not have realized that this is a market maker model, sell model? Well, you don't have to, right? You don't have to. What can you do? Well, you can take your swings. This high manipulated this high, on this high, so you get standard deviation, then we'll get 2 to 2.5, which is our Asian low. So this is where we closed. Did we come back here and show immediate displacement? No, we came close below it. That means we go to 3 and eventually 4. Did we go to 3 and respect it? We came to 3 and we closed below 3. We didn't displace up, so that means we go to 4. Did we go to 4? We went to 4. Did we close above it or reject it? We closed below it. That means we go to next standard deviation, which is 5. And 5 is probably this previous session's low. All right. So we go ahead and add -5, and just for the sake of it, I'll add -6 this way. This is -5. All right. We closed below all of them. We closed below 6. What about 7? So this is how we can start timing where the market is going to reverse. 7, we closed below 7. Nope. At 7, we closed above 7. So now we might have a potential opportunity to come back up if we get this basement up. If we close below 7, that means we go to 7.5 or 8. And it's going to keep on doing it. Nevertheless, we took our original consideration out that we had in our mind, right? And now we're starting to see some signs of holding back. I don't like too much sessions. Let's go ahead and close that. And we go on to the 1 hour and see what's there. This is a market maker buy model. Origin consolidation, first step, second step, smart money reversal after we took out these 1, 2, 3, 4 during CPI. And now we start targeting each of these highs. All right. Yes, we had a big drop down, but that's because there's models inside of models. So now we have models that are going against each other. That means we don't like that. We want to stay in the model. But since this model is complete, now the lower time frame model is complete, now we can continue with this higher time frame. It can continue going up. Like I said, high time frame ones, you would expect much longer to reach its target, okay? Much longer. So you expect bigger retracement in return. Always trade the smaller ones. For example, the 15 seconds, you can just scalp yourself a 50-second move, which I did earlier, I think. Right here. Where is it? Well, see? Even though the higher time frame model is bearish, it's a sell model, on the lower time frame, you can scalp yourself some long models. How is that? Well, we have original consolidation, market goes down, smart money reversal, all these highs right there, all these highs become targets. So here is called a low risk buy. Smart money reversals here, low risk buy, which most of us probably won't be able to do so. I entered, and I showed that in the chat, I entered at the inverse of this, right? Once we came back, we retested it, right? I took my long here, went up, this bearish FVG right there, I added one more here, and then I took my profits somewhere around here, okay? For $600, I think. But you can leave a runner all the way down here, even though everything looks bearish. Look how much after scroll up. It's here where the next swing high is. Once you take the target, okay, now we can resume the higher time frame model, and that way you can see the market continue going down. All right, so model inside of model, and the market is still going down, which is ridiculous at this point, to be honest with you. That's 1,000. That's almost 1,200 picks. That's someone's yearly salary from one con. So we'll wait for silver bullet, and hopefully the 10 a.m. news would pump us. Wait, hold on, we are at 10 a.m. What? It dumped us. In all honesty. So this could be a turtle soup. So what's our criteria to go long? Important level to bounce from. FEG, close above it, use as support, continue going up. Does this look to you like a market maker model? Nope. What about this? Original consolidation, first stage, second stage, down. But that's not enough. Any questions so far? I told you guys it's going to be a boring market. By boring, I mean it's going to not offer you any trades, or it's just going to be consolidating. Welcome, Gati. Yeah. I think PM session would be much better. So if you're looking to take a short, instead of going on the 5 minute, just go on the 15-minute. Find it's a break. High, higher, high, lower, low. The lowest lowest red candle from this high to that high is obviously this candle. This could be your unicorn entry. Once price comes back here, you can take a short and target this low. But I'm only looking for long snort. Are we sad we missed out on this move? No. No. Price never comes back to a random place and then pumps. Bruh. Once we come back here, maybe we can cut a suit along. People see these fair value gaps close below it, blah, blah, blah. It's been for a few days. They are still valid. They are not supply and demand. They will still be respected. Right? And to prove it to you is if we take the high to the low and put, you can see 0, 25, 50, 75, 100. Where did this candle close? At the 25. Yeah, we didn't have a gap, did we? Yeah, we didn't have a gap. No opening range gap. So expect silver bullet to be cracked. We're still waiting for that displacement. So how would that work out? We have this fair value up. We want to close above it. Disrespect this one. Respect it as an inverse. Intermediate up. Perhaps targeting high 400 ticks. This big wick, it always catch your eyes. Right now we're still respecting it. We're not using it as support. Oaken Basti. Basti is a great volume trader. And use this as an inverse, target this. It's a scalpel market, right? Beyond the here, target this. Or it comes back here, use that long. We're looking for longs only. This here is a mitigation block. So price should respect the midpoint of it. Right there. Right now, all this movement is worthless. We have to close above this to consider any longs. Where's our NWGs, by the way? Do you have any nearby? Nope. Lower, lower, lower. High at high. This should be our breaker block. We anticipate it's going to be a breaker block. You can take your entry. Close above it. So far, we are respecting the anticipated breaker block. It's not a breaker block yet. Once it closes above this green candle high, it will become a breaker block. And you will see that stocks algo will throw out for us. Right, close above it. Great. Longs can beat. I might take a stab long, we'll see. If we close above it. Alright. Hopefully it goes our way. How much am I risking? $2. Okay. Don't trade, guys. Just watch. Could essentially hold till one standard deviation, but I want it to move away from it because this is where the macro ends. The macro ends now, 10-10. So by this macro, we should have already took out this high. I don't like that, so let's see if we can get it. Kan du understand? You took the growth. One hit it, baby. Oh, well, bitch. There we go. Just like that, guys. You can essentially hold to one standard deviation. That should be taken out too. Whether I'm on my vertical. Hey, there we go. All right. Easy scalp, guys. Did it take us longer than a minute? No. We just wait for our setup. We had our structure in place. We want to see disrespect and respect. Okay. And thank God we did manage to do that. So we could expect a bit of retracement around here. Why? Because this here, where nobody looks at, is an inverse. Okay. Tapped it to the top. All right. So a normal retracement is allowed. We can, since we take out swing high, expect the price to come back to a discounted FVG. Where are our FVGs? Well, there's one right here. This area by itself is a strong area, so I don't expect it to come back here. Otherwise, our bullish price would be demolished. This is the midpoint of this order block is as far as it is allowed to go to. Otherwise, it's going to come back to this low. Okay. All right, we're going to come back to this low then. If we close below this, we're going to come back and go this low. Does that make sense? Yes, it makes sense because also we have even more discounted FVG here, and that low is taken out now. Done. Okay, you could have scalped that as well. Just because we know something can happen doesn't mean we should take it on, but it's It's fun. All right. So here, come back to this discounted FVG. How do I know if it's discounted FVG? Well, I go from this low to this high. Anything below this orange line is discounted. So we have this FVG. This FVG actually was not discounted. It was in the premium. That's why we expect it to be disrespected. My eyesight was a bit worse, but since now I joined this, you can see that this FVG right there is in the premium. The orange box is the premium. So expect bullish entities to be disrespected in the premium. The discounted FVGs are the one that should be respected. This one right there. Okay. And also this is a BPR, and then eventually we can come back and take out at one standard. Now, same thing here. We take out this right there, use it as support. Now, come back, retest it. You can scalp along all the way to here. How many ticks is that? You might not look a lot to you, but that's about 80, which is great. Now you might be saying, oh, look, you're on 15 seconds. Oh my God, this is too much noise. It's not noise, guys. You just have to know what you're looking for. I'm not that good to trade on the 15 seconds. I'm nowhere near good at trading 15 seconds. But the only reason I'm on the 15 seconds is because I want to get data. If I go on the 5 minute, we see this. What's this? What's this? There's nothing there to work with. Where's our FVG that we should use after displacement? This one. On the 1 minute, well, we did use our trade on the 1 minute. This FVG, original FVG that we wanted to use as retest was a 1 minute FVG. Okay, 1 minute FVG inverse, and you can target. We target this side, but of course you can target this side from here to here. It's exactly the same thing. The only reason I'm on the 15 second is because I can see more data. All right, I'm not looking at every candle going down, up, down, up. I'm looking for very specific stuff. FVGs that are under discount. From here to here. Where's the FVGs that are under discount? Just this one. My eyes go straight to this. So does the algorithm. It goes straight to it. It's noise when you see, oh my God, we got an bullish FVG here. Let's go down here. Right here, page. Once here, come back to this FVG. No, it's in the premium. Just like from here to here. Let me reverse that. From here to here, this is the premium, right? No. What the hell am I doing? All right, this is the premium. So this FVG, we expect it to be respected. Are we respecting it? Yeah, we're respecting right now. What about this one? We just cracked through it. Is it expected? Yeah, it is expected because this is a discount. This is a premium FVG in a discount. We don't care about it. The algorithm doesn't care about it. So now this is a premium FVG. We're closing above it is a very important signal that the market is going to pump because it shouldn't disrespect a premium FVG in a premium zone unless it's very bullish. And there you go. Where's our one standard deviation? Hold on. Don't get to my target before I pick you up. One standard deviation is right here. Well, we have a new breaker block. No. Higher. It's not printed yet. We have blank here. Once this candle closes above this green candle, this becomes a breaker block. Now look, I'm anticipating what the price is going to do before it happens. I'm not using an indicator to tell me stuff. Well done. We just hit one standard deviation and just like that. Now we'll come back here, retest this bullish breaker block, and then target this high. All possible. What's the scenario? We just repeat the same thing. We have this bearish FVG. We're respecting it. It's normal to have some respect. Just like how we did the same thing with this one, expect the price to go down. Same thing's gonna happen with this one, right? But we have this breaker. If I go ahead and come, well, waste. Anyway, there we go. The high stake. So you could have had your entry again here and here. At this FVG, I told you we want to close above it to be respected. We close above it right here. You could have took your long somewhere around here. $100 ticks, $500. Easy, simple. Doesn't matter what time frame you're looking at. All right. Now we expect reversal at 2 to 2.5. Right? Do we continue going up? How do we know? Look, how do we know? Well, you're 1.5. Do we close above one standard deviation? Yes, we did. That means we got to 1.5. We just got 1.5. Wow. All right. Did we close above 1.5? No. If we reject from 1.5, that means we go straight to equilibrium. Straight to equilibrium. Where's the equilibrium? Or even you can use this equilibrium. That's really not matter. Relate both. Expect a retracement back to this 50%. Since this 50% is FVG right there, we can expect the price to come back to this one. So if I put it to this one, it's exactly the same. Why? Because we expect the price to come back to this FVG right now. This FVG. If you use this as your anchoring point or this one as your anchoring point, it's this FVG or this FVG. But are we closing above 1.5? We close above 1.5, but I want it strongly. If we do, then we go to 2. Right now, we're just holding. All right, we're just chilling there right now. Wow, there's a lot of people. Welcome, Echo. Welcome, Singh. All right, you see how we're walking through whatever the market is going to do before it happens? Not because we're very good, not because we're very experienced. You don't have to get a lot of experience to do this. The market just repeats it every single day. All right? Can I move these? You might ask me, why are you using this one? Well, no, lower, low, higher, higher. This is a breaker block. You can take your Fibonacci from this low to this higher. And you get new threatened standard deviation. But since we entered, this was not printed yet. We were on around here. This is our breaker so far. Low, low, lower, low, higher. Highest green candle is this one. The body, not the wicks. The body, highest body. From here to here, it's green candle. So let me just put these back on. Oh, 1.5. There. So we expect 1.5. So we expect the market to come back. If it displays very strongly, we come back to the equilibrium of the range, which is this FVG. One of these two FVGs. And come back to this FVG or this FVG. Accumulate more orders and then come back and target 2. Okay? See? To the tick. Didn't I just say that before it happened? Like I said, it's not about experience. It's just the market is coded, the algorithm is coded to do so. And this is our FVG. Let's see if we get back here. But this is a breaker, remember? Breakers. Price should respond here. Where did it come back to? To the midpoint of this breaker block. We're expecting right now. There you go. The FVG came back. We had equilibrium, FVG, market quick liquidity. Market does one of market does one of several things. Market does 4 things. Run to liquid, to rebalance equilibrium, 3 rebalance to FVG. Okay? These 3. What's the 4th one? Generate liquidity, which is MXM. So, market ran to liquidity. What is it going to do now? It's going to do one of either 2. Run to liquidity is done. So it's going to go back to rebalance equilibrium and FVG. One of these 2. Most of the time, they're both the same. As you saw, equilibrium was at where FVG was. So 1 stone, 2 birds. Done. All right? Just like that. Okay? You can forget about the 4th one because 4th one is a bit hard to find. It's just keep in mind like this. Okay, just keep that in mind. So now we came back to rebalance equilibrium and FVG. So now we're going to go target liquidity. There's nothing else the market can do. Where's liquidity? We have this low and we have this high. Sorry, what the hell did I just do? Okay, we also have this low too. And that low is taken. So now market took liquidity. Now it's going to run to FVG. Maybe this FVG right there. Now, I know I'm just saying stuff, but I'm saying it not even I'm saying it in foresight, and you can base your trades on them, right? Based on what the market did already. We took liquidity. So while you're here, we're at 1.5 standard deviation. We expect the market to come back to equilibrium, right? We expect that. We just did. So you can be shorting here, or at the next first FVG, which is right there, just like that. But at this point, we don't care what the market is, right? Because we took our trade and we're done. Right here, we go down there. Right. Okay, took liquidity, rebalance to equilibrium, rebalance to FEGs. Now what's gonna do? What do you think it's gonna do now? Well, it's gonna chill because it did all these stuff. Right? It's gonna probably chill at around equilibrium. Where's the equilibrium? Equilibrium right here. Maybe here we find support continue up, or here we find resistance continue going down. Do we know? We don't know until it does make that move. Ah, we did all 3 points, remember? So what's the fourth point? Generating liquidity. What do I mean by generating liquidity? Well, I mean engineering liquidity. Well, look, that's just a synonym. I know. So we're trying to form these swing highs, multiple swing highs, come back down, and then start targeting them for later on. Right? This is a 15-second chart. So I want the market to actually go down, not up. So we can target these highs later on. Right? All these highs will become low resistance liquidity. Original consolidation, first step, second step, then the big move, smart money reversal, and then we start targeting these. Right? I don't know if we're going to do it now, but we can do it in the PM session. Now, what was good about our entry? Well, our entry was at the 10 a.m. point, right? Somewhere around here. So at 10, 8 a.m. It was during the silver bullet time. So I credit to silver bullet? No, I credit that it's between 10 and 11 a.m. because the algorithm runs on time. So I had time in my favor. Not necessarily I traded the silver bullet, I just traded within that time period. And during, like I said, where did we enter? We entered somewhere around here. And I told you guys, from 950 to 10, there's a macro. That macro is going to run to liquidity of anybody that is in profit. Who is in profit? Shorters. Whoever been shorting since the morning, they're going to be trading the stop loss. So probably around here. They don't want to lose more profits. So the job of the bloody thingy, which is helping us macro, is it's going to target the liquidity. Where's the liquidity? Here and here. This is the earliest one. When did we target it? Exactly at 10:10. 11, okay. All right. My bad. 1 minute late. Well, we got it. Okay, so I base my time on that because the algorithm is going to run and target these people who have been trading their stop loss. And I was in a trade and I was comfortable holding my trade because it's going to move me up very fast. Notice how from 950, well, 950 is too far away. How the movement was just too aggressively fast. It wants to take out these people, and then it went back down. Went up. Now it took out all these people being short. I don't think anybody's being short except hedge funds now. All the retail will not keep their stop loss here. They'll probably fail the all the way here, and they're stopped out, and they will not re-enter the trade. The difference between hedge funds and retail people is retail, once they get stopped out, they will be too scared to re-enter the trade. And the algorithm knows that and it exploits that fact. Hedge funds, they don't care if they leave the stop loss here. If they get stopped out, they get stopped out. They don't, doesn't matter because they're rich. They're very rich. They're not smart traders. It's very rich and they don't care. They'll just make that money back again. On a smaller time frame, we have accumulation. First step, second step. After the second step, the big move, smart money reversal at this FG key level. Now we target all these lows. 1, 2, 3, 4, right? So the market, you expect the market to come back down and take this out. The reason it's struggling here is because this is a balanced price range. This area here is a balanced price range. How do you draw it? It's not just the way where both of these intersect. That is wrong. That is not how ICT works. Balanced price range, or BPR, is where's we have two FPGs. Where's the highest wick? This one or this one? This one. So you anchor the high point to that one. What about the low? Which one's lower? This FPG or this FPG? Well, they both use the same low, right? They use the same low, so we can just anchor it to that. I don't know if I did it right. Okay. Now just extend it over, and we should not close below 50% of this point. Exactly 50% should hold. 50% is right here. Is this random, guys? Is this random? Nope. Is this random? Nope. It should not close below this area. It should not close below this area. Am I looking for all this stuff? No, I'm just looking when I'm going to take a trade. I'm just proving you that market is controlled. Every single thing on this 15-second is absolutely controlled. It's not random. Look at this. Look at this, guys. Is this random? No. You can be long in here. You can put your stop loss right here. Right here. Not even below the FPG. Right there. Forget there's the FPG. Well, you have to have an FPG for a BPR. But again, you can take your target here and then, of course, continue going up back to equilibrium. It's beautiful, guys. It's beautiful. Just you want to use it, you can. There's almost 83 different ways to enter the market. Okay. Yesterday we took all the trades on the MMXM. Today we just took it based on silver bullet or just displacement. All this here, we missed all this move here. We don't care. We just wait for our displacement. We got our displacement. We got what we wanted, and we took the trade. It went exactly where we wanted it to go. Now, what you could be simply doing is you were on the 5 minute, wait for our strategy. Our strategy is sweep, charge, FVG, right? So we got the sweep. Now we're in for the charge, and then FVG to enter and then target. But this looks like a continuation move. What do I mean by continuation move? I mean that from here to here, double it one more time, almost almost about 3 times big move, like almost 3 times the size of the previous session, right? So this is a continuation move. So when we get a charge, it might be just a retracement to continue going down, all right? If it was like this or like this, we swept, charge, FPG. Let's see if we have FPG or charge. Yep, this is a sweep. Sweep, charge, FPG right there. And there's a volume imbalance. Volume imbalance right there. You enter there and you go all the way down. Beautiful trade. In the morning, same thing. This is one, twice, not even, almost twice, I think. So that's a nice continuation. A nice sweep, I think. Yeah, it's not even twice the size, right? So you can take this short right there and then put it all the way down here. I don't recommend you to. Just put your standard deviations and target those, or just go with the flow and target the previous session low. That should be enough for you. All right. Anyway, my plan going to the day is reforming, starting to forming these swing highs. I like that. Okay. All these swing highs will be targeted later on. So I want us to sweep, manipulate, and then come back up, like smart money reversal, and then start taking these highs with the original consolidation being right there. Perhaps. And when this becomes apparent on the 1 minute, the 5 minute, and the 15 minute, and the 30 minutes, whatever time frame you like to trade, most people like to trade on 5 minute, then you can do the same thing. Just wondering, did anyone of you take the trade? The good friend, they would because he used to still use index. I don't use indicators. I just keep them on for fun. But these are the ones I use. You can use the free ones. I was just obligated to use the premium ones because rules, but now I can delete them and use the free ones. Okay. Yeah, that's pretty much about it, guys. I suggest all of you to trade in a PM session. Forget about the AM session for now, okay? Let the people lose their money. Let people get wrecked. In the PM session, it's going to be clear, okay? What can we trade for today? We can look for something called TGIF. Victor will today beautifully outlined. I don't know if it's his daughter, but there's something called TGIF ICT concept, which is thank God it's Friday, and basically is this is the current week, right? We expect a retracement to the 20 to 30% of that range. Go ahead and put 0.20, 0.30, I drawn it wrong. We expect the price to go close somewhere around the 20 to 30% of its range, depending how we make a high or a low in the PM session, right? Around the PM session, see if we made a new low or a new high. Probably we're gonna make a new low, so you can target the 20. You can take a long or a short to the 23, to the 20 to 30 place, 20 to 30% of the range. Now we guys can look what this is the current week. So this high, this low, this high can be changed. It's not static. That is true. That's why in the PM session, have a look. You will make a new low, then you should be looking in the power hour to scalp a short back to this range around here. Okay. That is a one way to trade. It's a healthy, efficient market when it does that. And it does it more than usual. So yeah. See, we have no data to work with here. Everybody's getting wrecked. People think they're going long, people think they're going short. No, that's why I dropped to the 15 second because I got much more data right here. And you saw how accurate that BPR was on a 15 second. Here we have a new BPR. Dump, pump, pump, dump. Where do you think this candle went to? This strike candle right here, where do you think it went to? Well, same thing. BPR. Take the lower one. And take the lower one. And now, that's your BPR. Midpoint is right there, to the tick. You see it? Now the price is going to find the resistance here. There's a BPR. If it closes above it, then it should hold the price to continue going up. You can see it's being respected. Where is it? Where did the bodies close, guys? Is this random? No. This is support. I'll get anything. This candle right here. Low or low. Lower low. Higher high. Where's the high spin candle? This one right here. I came back to this breaker block and then started going up. Look how we use this as support, like we just said right there. Use as support and then target that high. Okay. Does that mean I have to take a trade? No. Already made my money. I'm done. If I was not making money, I would be looking for those stuff. Just like that, guys. BPR entry, breaker block entry. If I put this indicator on, you probably get a shot. Okay, sweep, shot, FVG, enter this FVG, pump it. Add on this breaker block and add on to the BPR. That will be you scaling in. So I just showed you 3 different entries. Take the same trade. You might not understand this one here. You might understand that one. Maybe you don't understand that one. Maybe you understand the PVR. Maybe you don't. Whichever one you feel comfortable with, you can take it. And these are not $1, $10, $20 moves. That's about $400 in how many seconds? 15, 30 seconds. Okay, is that bad? Told you guys. Market maker model. Those are consolidations. We formed the swing highs. We finally made this SMR right here. We formed CHOSH, FEG. And then you start targeting all these. All these become targets, not are targets, but we can still hold to that level over there. It should finish it. It should finish it. And that model will be complete. And a new model will happen. How did I know this is gonna be like this? Because I told you guys, we had 4 different things the market does. Run to liquidity, run to equilibrium, run to FEG, or generate liquidity. We did the first 3. The market will either consolidate or generate liquidity while consolidating. That we're gonna be targeting. And done. Okay, there you go. Was that a beautiful move? 150 ticks in 2 minutes with 1 contract. Risking how much? I realize a quarter of that. It won't end until that high is taken out, guys. Don't worry. Well, what about? Look, low, low, higher, high. This is a breaker block that we thought about. What about this one? Low, low, higher, high. This one. Whatever is closer to us. This is closer to us. This is too far. Now it's closer to us. So we can use that. Or base your fib. Low, low, higher, high. One standard deviation, 2.5. At one standard deviation, we close above it, we close above it. That means we go to 2. If we go to 2, close above it, we close above it. That means we go to 0.5. 2.5, we close above it. Yes, so we go to 3. 3 is somewhere around here. And that target has been here. Congratulations. And how do you confirm it's a market making model? Just like this. This original consolidation should be within the 2 to 2.5 area. Is it? Yes, it is. Done. Now, and you can keep doing this. You can keep doing this, right? Where's 3? 3 is right here. Did we close above it? Yes, that means we go to 3.5. I'm not making this up. 3.5 close above it, that means we go to 4. But it's still not closed above yet. 10 seconds. 8 seconds. 6, 5, 4, 3, 2, 1. And we close below it. So we expect a retracement to add discounted FEG probably. Unless we, in the next candle, we'll start continue going up. Where is our signal? Where's our equilibrium? Yeah. Right, getting back to equilibrium. To this FEG, and right now we could continue go up, maybe to 4. If we close above 3.5, given that it gives a stop, closes above 3.5. And there you go, we're gonna go to 4. Beautiful, guys. Beautiful, 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 beautiful. And 4 taken out. All right, guys. I hope you guys enjoyed. A lot of stuff, I know, but it just repeated 3 times just in our session. We took benefit of 1, the second one done, third one was the best, but it does not matter. Okay. All right, guys. See you later, guys. Peace.